Let's go ahead and get started. Good morning, good afternoon, and good evening. Welcome to our conversation. I'm Jamie Anderson, and I work at CGAP. We're a think tank on financial inclusion housed at the World Bank. I lead our work on rural and agricultural livelihoods, which is an agenda entirely focused on women and how innovative financial services might improve their access to and returns from labor and markets. I'm really happy to be here on behalf of the World Bank Group's Agrifinance Community of Practice and CGAP, and appreciate that you've taken time to join this webinar where we're asking the question, is there a business case for digital financial services for women farmers? I'm joined by a spectacular group of colleagues to tackle this question, and I'll briefly introduce each one as they join the conversation. And in our short time together, I can't do justice to their extensive experience, but please go read more about them on our event page and follow them on Twitter and LinkedIn. So here's how our conversation is going to unfold. There are a few parts to it and it's going to go fast. So this is how it works. We're going to get started with opening remarks to frame the discussion. And I'm really excited to hear our two guests and the stories that they have to tell. Then we'll get a quick overview of this work, its context and motivation. And then we get to hear from the three digital financial services or DFS providers, DigiFarm, Fenix, and myAgro. Three quick snapshots of their experience, all focused on our core question. For women in agriculture using DFS, is there a business case? Then we move to breakouts. And in these small groups, you'll have a more detailed chat with each of them and the technical experts they worked with, bringing your expertise to this interactive conversation. Then we'll come back together and rapporteurs from each group will discuss what they heard, connecting it to their work and their wider experience. And then we close with some high-level observations to weave it all together. Just a few reminders before we begin. We're recording today, and we'll share a link to this recording and today's slides and the related paper in an email to follow. Do join the conversation in the chat box as we go. It's already wonderful to see who's here and to check out who's in the participants. Make sure you choose all participants in the drop-down box so we can see the comments, the questions, the resources that you share. And do share your own work and your favorite reads as well. Finally, hope for the best for technology. Sometimes, as you've all experienced, there's a time lag or a connection issue. If anything comes up, please be patient and we'll work through it. We're ready for anything and hope you are too. So let's begin. It's my great pleasure to invite Henriette Kolb to open our discussion. Henriette leads the Gender and Economic Inclusion Group at IFC. She's an advocate for gender equality issues in the private sector and works with IFC's clients to include both women and men as entrepreneurs, employees, consumers, community stakeholders, and leaders. She leads a global team engaged in co-creating gender-smart private sector solutions through research, investments, advice, and peer learning platforms. Henriette, we're so glad to have you open this conversation. Welcome, and over to you.
Thank you so much, Jamie. And just checking that you can hear me okay. I think that's a nod. Excellent, fantastic. So good morning, good afternoon, good evening, everyone. I'm really delighted to be here. I'm dialing in from rural Dayton, Ohio, where I'm currently on leave with a little toddler and my husband. So if you hear any exciting background noises, you can attribute it to them. I'm excited because this topic is just so close to my heart. And so I could have started with a lot of very grim statistics around COVID and the impact it had on women. But I've seen a lot of tens in this group already. So it seems that quite a few of you're already actually quite jazzed up and really excited to get the conversation going. So instead of talking about the problems, I want to just briefly share what currently excites me about this space and what are some of the trends that I'm seeing. So about 6 reasons for hope. Number 1, during the course of the pandemic, the media has done a much better job than ever before in really bringing out why it is important to analyze impact almost of everything, in this case, the pandemic, on women and men separately. Because we know if you create products and services, if you see results, if you measure impact, there is differentiated outcomes. So that's number one. The media has done a much better job than ever before, and I hope it sustains beyond the pandemic to bring these issues from the gender page into the front page. Second, over the course of my work at the World Bank Group, I have seen shareholder demand increase massively. They all want us to really consider how to design a better world, not just for one gender, but for all genders. And just to give you an example as to how that manifests itself, every year, the teams of the World Bank Group update our board, and every year, all board members from Saudi Arabia to Iceland and Norway come out with one single statement. That's very rare, and it indicates that they're all committed to driving this agenda forward. Third reason of hope, and the one that I'm most excited, and I think the one that you talk about, which is client demand has increased multifold. An example of that, I started off with a team of 6 at IFC, the International Finance Corporation, and I now have a team of 30 staff and 35 full-time consultants. That's a massive increase. And it's not because Henriette loves to build empires, it's because clients want gender-smart solutions. Then comes the fourth piece of hope, which is the business case. And I think you have put that in the title of this conversation. We've worked on many different products and services that we've created over the years. And the business case is really always there. So I'm not worried about, is there a business case? Of course there is. And I think we hear that in the conversation. So it's very strong rationale, no matter if you look at the leadership dimension, the workforce dimension, the consumer dimension, the supply chain, or the community. If you close gaps between men and women, the development outcomes, but also the private sector outcomes around business and profitability are always there. So it shouldn't be a question, the answer has been given, and it's very clear that this is the case. And then certainly, last but not least, innovation. And innovation is really what I think this conversation is all about. So I'm excited to listen to all the speakers coming up imminently. Products and services that speak to men and women differently. And so my team has created over the past years, like 5 or 6 new products and services, I would say. And I just give you a quick example of one, but I mentioned just for your benefit, all of them. So one is around housing finance, really trying to better understand what housing finance products and services look like for women and men. Quite a big business case. IFC has done a great study, our financial institution colleagues, and so check that out. Second one, insurance, and I know Women Well Banking is just coming up next, and so Ade probably might mention it, but insurance product need to be designed differently. Third, ride sharing and transport and logistics needs to be designed differently. We've done some fantastic work with Uber on that, measuring.
And I think we may have run into a connection issue with Henriette. So it's good to get the first tech issue out of the way early. But I really did enjoy the 6 points that she started with. And I think that's a great way to start the conversation. And I now have the great pleasure to invite Ashaye to share his opening remarks. Ade is the Executive Vice President of Women's World Banking, a global network that designs and invests in financial solutions, institutions, and policy environments in emerging markets to create greater economic stability and prosperity for women, their families, and their communities. Ade leads their efforts to expand their network of financial service providers committed to achieving women's financial inclusion. And Ade, financial service providers are at the center of women's world banking and the center of the question we're asking today. I'm really looking forward to your opening reflections from that perspective. So welcome, and over to you.
Thank you, Jamie. Thank you very much. And you're right, we've been at Women's World Banking, we've been driving economic empowerment for women for over 40 years. And my specific role is to lead the network. We currently have a network of 56 financial institutions in 31 countries with a combined customer base of just shy of 70 million women. And really, we know that there's this persistent gender gap, global gender gap of around about 9%. And in order to sort of start chipping away at that gap, what we've started to do over the last few years is try to evolve our network to include not only those microfinance institutions that have transformation at their core in their DNA, but also these larger, more commercial financial institutions, these multinational institutions, these large banks, large commercial banks, who just by fact of their mere scale, if we're able to convince them and help them understand the opportunity, that's a really great way for us to really impact that gender gap. And you're right, there's a common question in all of these conversations as we're talking to these larger banks, and it is around what is the business case and how does that stack up against all of the other opportunities that those institutions have. You remember many of these banks especially are starting to build women's teams to experiment with the ideas of trying to solve specifically for the women customers, start to launch the products. Henriette mentioned some of the products that they're starting to launch to solve specifically for the differences between women and male customers. Now, we know the social benefits of investing in women. We know that women spend significantly more of their income on their family, on their children's educations, on healthcare. We know that there's a customer lifetime value component to the business case of investing in women. We know that women are significantly more loyal as customers, and that loyalty to the institutions that they trust, that loyalty results in the women investing more and buying more products and services. We know that women save more. We know that women pay back their loans at a much greater rate. So they're a fantastic customer base. There's a recent study that showed, I think it was a 5-year study of 350 startups that showed that the women-led startups paid back over the 5-year period 78 cents per dollar invested compared to 31 cents of the male-led startup. So numbers and the stats are out there. We know through some of the work that we've been doing in our leadership and diversity area is around, we've proven, or we've shown that women in senior management and particularly on the boards of these institutions link and can parallel directly to a better performance in profitability and in sustainability, and also around things like the non-performing loans. So there's stats, the case is out there. There's lots of evidence to prove that women are a good investment. But I think asking and answering this question in a slightly different way, and particularly here through this kind of crosshairs of where gender meets digital meets agriculture, that really adds to the body of work. It really does help increase our understanding. If we look in markets like Nigeria, where the opportunity to impact women's financial inclusion is vast, we've found that it really only takes one institution to understand, to believe, to invest, and to prove that women are a great investment case, and the rest of the market will follow. So where we've got this persistent gender gap, this persistent 9% gender gap, proving to these larger institutions who through their scale can really impact that gap, I think that's the way we're all going to benefit from the work that we're doing. There's a very well quoted study that says something like there's a $28 trillion GDP opportunity out there just by ensuring that women can participate equally to men, and that's the opportunity that this kind of work really does start to unlock.
Thanks a lot, Ade. That's really helpful as we get started. And you and Henriette have nicely framed our discussion. And now we're going to look more closely at these specific collaborations. And I'll invite our two colleagues who led this work to share an overview. Rachel Sparrow-Kessler is a financial sector specialist at the World Bank, working across financial inclusion, agricultural finance, digital finance, and the financing of catastrophic risks. And Toshiaki Ono is a senior financial sector specialist at the World Bank, where he supports lending projects and analytical work, mainly in Africa, promoting access to finance in the agriculture sector. Rachel and Toshi will take the next 10 minutes to outline the context and motivation for this work, setting the stage before we hear from the providers. Rachel, over to you. Tell us what motivated the World Bank to launch this project on DFS for female farmers.
Hi, Jamie. Do you hear me?
Yeah, we can hear you.
Perfect. And you see the screen, right? Okay, I didn't hear if you, do you see the screen?
Yeah, everything looks fine.
Perfect. Okay. Well, thank you. It's a pleasure to be here with you. And it's actually really touching to be with this fantastic group of people now. And it makes me think about how everything started 3 years ago in 2018, when we at the Agriculture Finance team, together with the Agriculture Practice, developed a concept note on digital financial services for female farmers. And we applied for funding from the Umbrella Facility for Gender Equality. And I know that there are representatives from this trust fund here today. So I want to thank you for your support on this important work. And this is what was our motivation. Here it is. The yield gap between men and women farmers is about 20 to 30% in agriculture. So that means that between a farm managed by a woman and a farm managed by a man, the farm managed by the woman produces about 20 to 30% less. This is due to a variety of reasons, including social norms. So women tend to be more time constrained and mobility constrained, but also they have less access to resources such as land and inputs and information and labor and finance. All of this leads to lower yields. It's estimated that if we manage to bridge that gap, we could reduce the number of undernourished people by 100 million people. So can finance play a role? Well, we knew back then already that finance would not be the silver bullet that would all of a sudden solve gender inequality in agriculture. However, we knew that finance could play a pivotal role. Think about credit. If women had more access to cash, they could invest in quality seeds and fertilizers and increase their yields. But think about savings as well. There is this study I find really interesting that was conducted in Côte d'Ivoire among female workers in the cashew nut sector that shows that women that were offered a savings account and opened that account, they increased their earnings by 20%. That means that the simple fact of having a safe place to save that's protected from the pressure to redistribute income among social networks led these women to increase their earnings by 20%. So yes, finance can play a role. The question was, can digital financial services be a game changer for female farmers? And here the question is a bit trickier because it could actually go both ways. On the one hand, for women that tend to be more mobility constrained and more time constrained, having access to financial services from their fingertips could be a game changer. But on the other hand, if you look at the numbers in terms of digital divide between women and men in terms of phone ownership, in terms of mobile money usage, you realize that developments in digital financial services could actually increase gender inequality. So what we thought was, let's help digital financial services providers design and market services that take into account the specificities of female farmers so that they are not left behind the digital revolution. What we really wanted was to be at the intersection of those three circles you see on the screen: gender, agriculture, digital financial services. And we wanted to help providers that had at least two of these three components and that wanted to add or develop a third component. We picked three providers, and we'll hear from them in this session. But before we do, I want to share with you a word of caution. There are three very different companies operating in three very different countries, and they received very different types of technical assistance from us. DigiFarm, it's a mobile platform owned by Safaricom in Kenya, offering a wide variety of services to farmers. Fenix in Uganda sells solar home systems to rural households, and they leveraged the data they had on rural households to actually design and offer financial products to them. And they noticed that they had several female farmers among their clients, and they wanted to explore developing a product for them, or that would address their needs, let's say. The third one, myAgro, it's a social enterprise that was operating in Mali and Senegal, that was offering a digital layaway product that allowed their customers to save little by little for inputs through scratch cards. And they wanted to start operations in Tanzania and move to a fully digital offer. So 3 very different companies, 3 different objectives, 3 different countries. Kenya is much more advanced than the other 2 countries in terms of mobile money penetration and also gender gap in mobile money. So different situation. And third, those 3 providers received very different types of technical assistance. So myAgro in Tanzania actually received very limited technical assistance in terms of scope and scale. myAgro knew very well what they wanted to do. They wanted to launch that fully digital mobile layaway in Tanzania. That's what they wanted to do. And the technical assistance we offered was very limited. It was about making small adjustments, small tweaks to that product so that uptake among women would be maximized. On the other hand, DigiFarm and Fenix received much more significant technical assistance. On the one hand, for DigiFarm from Dalberg and for Fenix from Strategic Impact Advisors. For these 2 companies, there was full-fledged market research that was conducted based on which product prototypes were developed. So 3 different companies with different objectives, 3 different countries, 3 different types of TAs. So let's try to learn as much as we can from these 3 different experiences, but without trying to compare apple to oranges. So, and in any case, I think it will be really interesting to hear from them about what happened after the World Bank left. But before that, I think my colleague Toshi will share a few insights about what we learned through this journey. Over to you, Toshi.
Thank you very much, Rachel. So as Rachel said, before going into these excellent partners, we wanted to share what we learned from this project, some key highlights. So first, for the financial service providers, segmenting female farmers offer critical insight. The female farmers, as we all know, are far from homogeneous. They can be categorized based on, for example, decision-making power in a household, economic independence, and familiarity with IT solutions. The analysis may tell you that some segments are just really hard to reach immediately through a financially sustainable way, while others may show business opportunities. The economics is quite important, obviously. Human-centered design is another useful methodology. In the project, the products were developed based on the key findings from the target segments of the female farmers. For example, DigiFarm found that female farmers face 2.5 times as many emergencies as other Kenyans, and they are strong savers. These findings are reflected in their products. And lastly, no matter how well you developed your products, gender gaps in mobile phone ownership and accounts can be a significant obstacle. Can you go to the next slide? Thank you. So for the development institutions, selection of financial service providers is the key success factor. And we are extremely lucky to have 3 excellent partners for this project. And we are happy to share lessons learned through this webinar. The objectives, approaches, and timelines of the development agencies need to align with those of the partners. And we also think that there could be other support mechanisms beyond technical assistance, such as risk-sharing facilities and investment, so that financial service providers have access to external finance for product execution and scale up. Lastly, one of the key questions for us has always been if the partner sees the business case for serving female farmers. And we will discuss more on this point this morning and this afternoon. Thank you very much.
Thanks, Toshi. Thanks, Rachel. Important context to set the scene. And now we bring the 3 DFS providers into the conversation, getting to our central question today about women working in agriculture and using DFS and exploring the business case. We'll hear from all of them before going into our breakout sessions. And their perspectives are key, The motivation is fundamental. The context is important. It's great to have funders and researchers on board, but for DFS providers to stay engaged and keep providing women with these services, there has to be a business case. So was there, or could there be a business case for DFS tailored to women in agriculture? Let's see what they have to say. DigiFarm is our first DFS provider, and Leesa Shrader will tell us about them. Leesa's director of the AgriFin Accelerate and AgriFin Digital Farmer programs at Mercy Corps. She leads an amazing team that's worked with 130 partners to design, test, and scale digital products and services, which together reach over 16 million farmers. Leesa, welcome to the conversation, and over to you for a snapshot of DigiFarm.
Thank you. Thanks so much, Jamie. I am turning on my video, and I guess I'm sharing some slides for this quick look at the DigiFarm product. Jamie, can you see my slides now?
Yeah, looks great. If you want to flip it into the presentation mode, perfect.
Got it. Okay. All right. Well, thanks, everyone. And you may be wondering why someone from Mercy Corps is presenting on behalf of Safaricom here. Let me tell you really quickly a little bit about Agrifin and why we're sitting in this chair right now. The Mercy Corps Agrifin programs have been funded by the MasterCard Foundation and the Gates Foundation, among others, to help organizations design, test, and scale digital services for smallholder farmers with the goal of reaching at least 40% women. And the idea of the program is to seed a competitive digital ecosystem. We've worked with more than 150 partners, but one of them, and one of the biggest, is DigiFarm. And essentially what happens for our program is we'll go into a country context, have a look at the digital ecosystem, the different organizations that we think could be transformational for agriculture. And in the case of Kenya, the very first organization that we went to was Safaricom. And that was largely because of the M-Pesa product that they operate in Kenya. I'm sure most of you guys are familiar with it. It was the first real breakthrough in mobile money in Africa, and has launched 1,000 ships. But one thing that's also really important about DigiFarm is that it reaches 51% women. So from our perspective, Safaricom was our very first stop. And when we went to meet with Safaricom, they told us they had an idea for a product called DigiFarm, but they had no idea what it was going to be, what it was supposed to be. They said, listen, we understand mobile phones, but we don't understand farmers. And so we started working with DigiFarm in 2015, a long time ago. We've done more than 50 engagements with them. And where we started was with human-centered design. They didn't understand farmers. They had some ideas. They had some academic research, but we began work with Dahlberg at that time to do blue sky thinking. We did 3 major rounds of human-centered design using these types of just paper-based prototypes to figure out what were farmers' goals, what were their challenges, and what were their needs. And frankly, the results shocked all of us, definitely shocked Safaricom. But as a result of that, we were able to map ecosystems, understand women, understand men, figure out how digital technology could be brought into the ecosystem to add real value. So over the last 5 years, basically this is the product roadmap that we developed with Safaricom in 2016, at the beginning of 2016. And it's a product roadmap because you can't really build and launch all of this stuff overnight. It takes quite a bit of time. But what we did was we combined the understanding of the market with the capabilities and ability and risk appetite of Safaricom and developed this product roadmap, which turned into this business model. And essentially what we found out from farmers was that what they were interested in first and foremost was learning and getting good, reliable input at a good price. They were worried about financial services, worried about credit in particular, unless they could learn to be better farmers and they could have reliable inputs. So the first release of the product was around e-learning and quality inputs. And this solution, which was expected to maybe reach 60,000 farmers in 6 months, reached 200,000 farmers in 6 weeks. And suddenly we realized we had a product. So the next thing that we began to work on with the financial services and the input credit, the input scorecard, the credit scoring framework to get farmers to be able to access inputs at a touch of a button. And that was a mess, and it took about 2 years to figure it out. And we started to realize the deep need for data, but also for complementary financial services. So we started working on things like soil testing and crop insurance. And then the real driver, what farmers said that they really wanted was access to markets. Then we saw issues with weather, brought in precision weather services. But in the background, we were always asking ourselves that question: how many women are joining, in each product area? And what we found was that there were a lot of women in e-learning, but very, very, very few in input credit. There were very few that were originally going into the market space. So this project with the World Bank came along at a really great time, as we were starting to ask ourselves, why are we seeing such highly varied progress for women on the platform, particularly when DigiFarm, when Safaricom was already reaching 50% women? Why were we seeing only 10% women getting the input credit? So we began this process with the World Bank, tapping into work that the Gates Foundation, Rockefeller, and others were doing with Dahlberg to develop something called the human account. So this is a nationally representative behavioral study of multiple markets. And what we were able to do was take the Kenyan study and break down the women's smallholder component, and begin to gain insights, and then use those insights to develop products and services. And what we saw was the absolute critical nature of savings for women. And there were a lot of insights, and I really appreciate Ade's point about needing to develop different market segments among women. Not all women are uniform, but what we saw was that women were saving to survive and struggling to build, right there in the middle. That that their margins for error were minuscule. That the decision to take credit was huge. There were so many contextual factors, and their financial strategy was shaped by emergencies, lurching to and from health emergencies, different kinds of financial hits. So what we ended up doing was taking all of these insights and driving it into the entire business model for Safaricom, for DigiFarm, but also developing a savings product specifically for women. And bringing all of those insights into the development of the savings product. I'll just go back really quickly. What you'll see here is that the savings product has yet to launch. And this was one of the challenges that we ran into, that the government would not allow Safaricom through mobile money to operate a savings product. It had to be operated by a partner bank. And that savings product is still being presented to different partner banks of DigiFarm. A lot of them are very concerned about that savings product cannibalizing their own banking savings products. We've really struggled with getting that savings product to market. And it will continue to be a focal area for all of us, because we see how important that is for women. However, I would say that the project was still a major success, because what it did was it highlighted to DigiFarm where they were going wrong with reaching women. So you'll see here on the left-hand side, when the 1.3 million farmers on DigiFarm were registered, you can see only 36% of them were women. So this was before the World Bank project. Then, using the information that we got from the study, it was incorporated not just in the design of the savings product, but the design of everything that was run out in the bundle of services from Safaricom. And so now you can see that in the active use of DigiFarm services, we're getting to almost, and actually over there, you can see 51% access to markets, 48% access to input loans, up from 10%. And then the learning module, so for us, this was a huge win. I think this project was extremely important for DigiFarm to begin to understand why reaching women farmers was not a slam dunk based on what they had done with, that's a technical term from basketball, just in case you guys don't watch the NBA. But what we, my last slide here, I'm probably already over my 5 minutes, is just showing the results of impact studies now. That are coming in 2021. So for women on DigiFarm, this 50% active group, women are reporting increased yields in farm productivity, and that is converting into better use of inputs. It's simplified farm activities, increased incomes. It's helping them to diversify income streams. One of the things that we felt was really important and something that we worked on a lot is that DigiFarm seems to be increasing women's agricultural decision-making power. They can choose their own inputs. They can choose to access credit themselves, and the increased income is resulting in growing household financial decision-making power as well. And then what's extremely important to us is this is allowing them to hire extra help and save time, and increasing their investments, as Ade had said, their investments in their, in their food security and nutrition. So getting it right on digital platforms can have the impact that we're starting to see. You're always going to run into challenges. We're still looking for that great, fabulous bank who can come and launch this savings product. But I think that the combination of all of the financial services, from the input credit to the insurance, to the digital payments, and then hopefully onto the savings product, are combining, to really help women get where we want them to be.
Wonderful, wonderful. Thanks, Leesa. I really appreciate your frank comments, and there's a lot more to explore there in the breakout session. In the DigiFarm breakout, Leesa is going to be joined by Sharon and Javika, a creative lead at Dahlberg Design, based in the Nairobi studio. Their rapporteur is Clara Kalina, Program Manager for MasterCard Foundation's Rural and Agricultural Finance Learning Lab. And the facilitator is Toshi Ono from the World Bank. So let's turn to our second DFS provider, Fenix, now NG, Energy Access. And Chris Emmott will share a word about them. Chris led the development of value-added services at Fenix and is now lead product manager for digital financial services at Paga, a mobile money provider in Nigeria. Chris, welcome to the conversation, and over to you for a quick look at what Fenix was working on.
Thanks very much. So just to get started, my name is Chris Emmott, and so I used to be Fenix International and now with Paga. So can I control this all right? Yes, okay. So just as a quick intro to Fenix, so Fenix was a for-profit next generation energy company with a mission to improve the lives of our customers through inclusive energy and financial services. So as mentioned in the intro, the company is a solar home system provider. So they're providing lighting and phone charging to rural households in off-grid areas. Since summer 2020, Fenix then became part of NG Energy Access. And so now continuing on that mission to provide lighting and basic energy services. As of 2019, Fenix had around 600,000 households with their solar home systems across around 6 African markets. About 80% of those were involved in agriculture, and around 42% were women. So the core of the business is that solar home system, and which is paid for through small regular payments through mobile money. And what that allowed us to do was to build a credit score of our customers. And in addition, the system turns off if a payment is missed. And so that allows us to collateralize the lighting service that's been provided and collateralize that solar home system. Now, through that technology platform, we could offer expansions to the customer's battery, so build them TVs or more lights, but also offer additional services like credit, so through just financial loans. And when we were thinking about agriculture, we saw there was a potential real opportunity for women in particular, based on 3 aspects. So one, that women was a particularly underserved market for financial services. And so there we expected there to be a large demand among women farmers for a credit product. We also hypothesized that their activities would be at a scale that's which was closer to what we could provide through the credit we were offering through this solar home system, collateralized on this solar home system. We imagine to have slightly smaller scale farming activities than your average male farmer, and also expected them to have more subsistence-based farming with a variety of harvests, so tomatoes and aubergines and different crops being harvested throughout the year, which would then also be better suited to making small regular repayments in line with the pay-go model that we're operating with that solar home system. And we saw two key drivers for the business case here. One from the direct product revenue from offering a credit product, but more importantly, it was actually how we could improve repayment on the solar through improving the financial health of women farmers amongst our customer base. So a couple of lessons I want to share with you from both the work that we did with the World Bank, but also some other projects we did across Uganda and Zambia, targeting our farming customers. So the first one is that in the words of Dean Carlin, when money falls on uneven terrain, it tends to fall into the deepest holes first. So when giving loans to farmers, in our experience, we found that money is going to be used for the most urgent needs, and not always for revenue generating activities like farming. However, that's not necessarily a negative, and in fact, actually, there's some real positive impacts on the farmer's financial health of being able to deal with urgent expenses, and then that allowing them to avoid selling harvests early or selling livestock before planned, or taking very unfavorable debt from money lenders from future harvests. The second lesson was that investing in agriculture is risky. So often farmers, in our experience, farmers who are given the opportunity to get credit would not invest that in their farming activities, but would actually diversify their activities to other, in Uganda, what are called side hustles. So this is a big evidence for this was when we were trying to offer loans to farmers in Zambia. In 2018, 2019, we found that many of those farmers were investing in carpentry businesses, trading in fish, and actually the 3 years of drought preceding that time had really impacted their willingness to put more of their eggs in one basket on their farm. And we also saw the same with repayment, with people who hadn't invested in their agricultural activities actually having better repayment on those loans. So these risks are both natural, so weather and pests, but also the availability of quality seeds and fertilizer in the market. So the final one was that research with Ashaye found that actually there was a lot more agency among women farmers than we expected. So we found that there was a significant market for women farmers with very large agricultural financial needs. And it was much more similar to the needs of our male customers than we expected. So that unfortunately meant that their needs didn't match particularly well with what Fenix was able to provide, when we were trying to collateralize against a less than $100 solar home system. We found that their needs for finance were much larger than that, and also not suited to the small regular repayments. So at the end of this project, we saw that there was a potential for Fenix to make a contribution to that finance, but not to cover it entirely. And we also saw the importance of adding additional services, like Leesa mentioned before, the importance of providing access to extension services and also high quality inputs. And so that led us to start discussions with Easy Agri, a provider in Uganda, to provide loans to over their platform, which offered high quality inputs to these farmers. And yeah, that's all the lessons from me.
That's great. Thanks, Chris. A lot to dig into in your session as well. In the Phoenix breakout, Chris is going to be joined by Jeremiah Luwebuga, a digital financial services and agri-value chain specialist at Strategic Impact Advisors. Their rapporteur is Nathan Ware, operations officer with the IFC Agribusiness Unit in Nairobi, and the facilitator is Rachel Sparrow-Kessler from the World Bank. We have one more service provider before we go into the breakouts, and this is myAgro with Kervin Bwemelo, who's going to outline their work. Kervin's the country director for myAgro in Tanzania, and we're really happy to have you in this conversation as well, Kervin. So over to you to give us an intro into the work of myAgro.
Thank you very much, Jamie. Can you hear me?
Yeah, sounds great.
Awesome. So I will have Rachel running through my slides, and I'm going to kick back the video so that I can save some bandwidth. I'm able to run through the slides. Good. So a quick intro. Yeah, I'm the country director for myAgro Tanzania. I joined back in August 2019, and yeah, prior to joining myAgro, I was working with microfinancing for 7 years, renewable energy, solar specific, Zola Electric in Tanzania for 5+ years. So, you know, what really inspired me to join myAgro was, you know, the audacious goal of reaching and serving 1 million smallholder farmers, which ties back into my passion to, you know, work and engage with, you know, rural groups and communities. Yeah, so talking about myAgro and today's theme question. So myAgro is a social enterprise that pioneered a mobile layaway model that really enables farmers to invest their own funds little by little towards a high quality seeds, fertilizers, and trainings to significantly increase their harvest and income. So if you go back to the North Star slide, Rachel. So our North Star is basically to move 1 million farmers out of poverty and do this by 2025, because we believe that those who feed us should not go hungry, and you know, them and their families. So next slide. We also believe that well, we have a very simple solution to this large problem. Our model kind of tackles the 3 main obstacles to increase farmers' yield and incomes by, you know, for example, you know, women's financing, access to on-time delivery of high-quality inputs, but also agriculture training. Through our mobile layaway platform, farmers can pay with their own funds in a small, incremental, and frequent, convenient time throughout the year. This is done towards income generating input packages that we have designed. We designed this platform with the farmer, but also going through a lot of iteration as we, you know, work with farmers. So the layaway platform aligns very well with the farmer's cash flow throughout the year. Throughout the year, you know, the payment accumulating each farmer's mobile wallet, and those who can reach their savings goal get delivered with the inputs that we buy in bulk, and this is done right in time for the planting season. So in addition, we provide harvest boosting agriculture trainings, such as, you know, fertilizer microdosing, and, you know, we provide support to our farmers to, you know, throughout the season to make sure that they maximize on that harvest. So myAgro's approach is unique in a way that, you know, it empowers small older farmers with, you know, a lot of emphasis on women to fund their own development through layaway funds as opposed to debt-based solutions. Next slide. So the unique approach has led us to servicing close to 90,000 farmers in the past season in 3 countries, which is Mali, Senegal, and Tanzania, who ultimately grew into, who got into to grow 70% more food and increase their income by close to $0.3 per day. And then this is very pivotal to these households who live by, you know, below the poverty line of $2 per day. So getting back to, you know, tying all of this into our, you know, question and theme of the day, is there a business case for digital financial services for women farmers? You know, our perspective is absolutely yes. You know, 60% of our farmers are women. According to the UN, giving women farmers the same access to tools and trainings as men leads to an estimate of 20 to 30% yield increase in crops. So potentially lifting, you know, close to 150 million people from hunger. So investing in female farmers can be, critical and pivotal to increasing the, food security of not only their own families, but to their communities and the countries. So this was more relevant back in 2018 when we received the TA, but it is even more important and relevant today as the effects of the global pandemic threatens the food security, which gives us myAgro full and more fuel to drive towards our North Star. Thank you. Back to you, Jamie.
Thanks, Kervin. That's great. You're going to have another great breakout session. The rapporteur in your group is Alicia Donald, economist at the Gender Innovation Lab in the World Bank's Africa Chief Economist Office. And the facilitator is Asuko Okumura, operations officer for the Agriculture and Food Global Practice of the World Bank. Asuko focuses on responsible and sustainable agribusiness, agrifinance, disruptive ag technology, and she's also worked with myAgro. So that's going to be a great conversation as well. So let's move into our breakout session. They'll last for 20 minutes. For the first 5 minutes or so, the DFS provider and their TA partner will share more about their story. And then you join in the conversation with your questions, your ideas, your own expertise, all focused on our central question: is there a business case for digital financial services for women farmers? We know it's impossible to choose among these 3 super breakouts, but remember, they'll all be recorded. You can catch the other ones later. When we're transitioning to the breakout groups, if there's a technical issue, drop a message in the chat and we'll get you to the right place. With that, let's go to our groups and we'll see you in 20 minutes.
Had secondary school education and were more digitally savvy. They were keen on exploring different types of financial methods, and they relied on balancing their income from farming with businesses or even formal employments. And so looking at these sort of segments that emerged from analyzing that data, we went back with the HCD to sort of understand how to be able to design for them. And now I'll share some of the learnings that we had from that. With understanding how women save, their savings behavior, their credit behavior, their tolerance for risk, how conscientious they were, and how in control they felt in their finances, we were able to identify primary use cases for women farmers. So we could see clear opportunities to be able to design, not just for women farmers, but these 4 segments that we saw. The savings profiles really helped us identify really high potential mobile savers and develop segments targeted towards different product features. The psychology element of the data really helped us develop segments design principles that were around messaging, features, channels, and strategies. So we were able to dig deeper within each product design to be able to design for each of those psychological elements. But broadly, on a more programmatic level, we also had some learnings, right? One thing we learned is that no one size fits all, as seen from the data segments, right? And here we really must consider the enabling environments with specific focus on education, socio-economic, and legal, as well as regulatory barriers that women face across the different locations that we're looking at. And these contexts and environmental factors might actually negatively impact women's ability to access their financial services, to access information, and access markets as well. The second lesson we learned is that gender gaps in phone ownership and mobile money accounts can actually jeopardize product uptake. The challenge here of digital financial usage among female customers did not necessarily materialize in Uganda or Kenya, where mobile money penetration and usage rates were high, especially among women as well. When we look at segmenting female clients into subgroups, it's really a key element of design. Focusing on those differences between male and female clients can show those more gender disparities that we see but really looking at those dimensions within gender, so the different data elements within the different segments can really help us explore nuances and diversity within women farmers. So looking at the differences in agency, decision-making, sources of income, and level of comfort with digital services and credit as well. The fourth lesson that we learned is that gender considerations must be embedded throughout the entire research process, not just when collecting data. So really making women more comfortable and increasing engagement required that we used female researchers for this work. And sort of also crossing those language barriers to be able to get women to open up more quickly about topics such as finances and positions in the household. So really tapping into local staffing and dialect as well. And also just considering what women were doing, what women sort of do in their daily lives, how they manage their times when they're available, etc. The fifth lesson was really that the power was in the mixed methodology element of this research. Using quantitative data analysis complemented by human-centered design really helped us sort of dig deeper and also go wide in terms of the data as well. And finally, the economics of serving female farmers can be challenging in some markets. And so establishing a business case is really key to generate internal buy-in. Women tend to require a package of services that is delivered in a high-touch manner. And so this can be specifically challenging in some areas. So really looking at the differences between men and women as well as the nuances within gender is a really key element of design, especially if you're looking to do it at scale. I know I hope I'm not over the 7 designated minutes, but those are the sort of high-level design learnings that we had from DigiFarm, and would now like to open it up to the floor for any discussions.
Thank you very much, Sharon. This is Toshi. Sorry for being late. We have a question from Joy in the chat. Basically, the question is curious to learn and hear more about how digital technology played a role, either enable or hinder the success of the DigiFarm operations and use on the ground. Maybe Sharon or Leesa, if you could take this question while others are coming in. Over to you.
Sharon, do you want me to take that one first?
Yes, please, Leesa, thank you.
Okay, so the DigiFarm product or platform was designed to be digital from the very beginning. So, you know, Safaricom, they're not farmer specialists, they're digital specialists. So from their perspective, the idea of DigiFarm was always to create a digital platform that leveraged their strengths as a mobile network operator in moving data, communications, products and services, and mobile money. So, you know, they felt that that the platform played into, you know, the strengths that they had around having a very strong agent network in rural areas. So I'd say that digital has always been at the very core, was part of the original design, and the whole thing was built to be enabled by digital. But in terms of your great question about where did it hold DigiFarm back, one of the things that we did learn through human-centered design was that the farmers were perfectly willing to do some services on their phone. You know, they were ready to learn on their phone. They were ready to apply for a loan on their phone. They were ready to buy inputs on their phone, but they absolutely would not use the marketplace on their phone without a human touch point, without a trusted human interface, as we talk about it. What we learned was that a lot of the products and services that DigiFarm was putting out there were, you know, leading farmers into a digital world where they weren't entirely comfortable, and some services needed somebody on the ground. So when they launched the marketplace, they also launched a digitally enabled field force. At one point, it was up to 1,000 field officers officers, but I think now it's sort of stabilized at like 300. And each one of them has a smartphone that helps them to, you know, go out and work with farmers and turn up and say, yes, if you sell, you know, I will get you to market, I will be there, et cetera. And one of the things that we learned was that when that digital field force was put on the ground, women's active participation rates did increase. So you have to get the product right for sure. So product design is absolutely critical. But there's also something that's extremely important in the digital journey, the digital to human journey, that seemed to change significantly for women when field force was put into play. So I hope that answers your question. And maybe Sharon, if you have anything you'd want to add into that.
No, I think you covered it well. Thank you, Leesa.
Great, thank you. So the next question from Yasmin is about the norms. How about the norms that drive the financial behaviors? How does DigiFarm see their role and capacity in shaping social norms? Would you want to take that?
Well, I'll start on the deep history, you know, and then it'd be great if Sharon wanted to jump in. But, you know, in the original human-centered design that was done 5 years ago, 6 years ago for DigiFarm, the original idea was that farmers like to be in groups and that women like to be in groups and that DigiFarm should be designed as a group system. But one of the things, as I mentioned, and you know, we were surprised by what came back, but overwhelmingly, farmers were saying, "I don't have anything where I can just meet my own needs as an individual. I always have to take the same inputs as all the rest of the farmers in the group, or the same loan as all the, you know, in the same time period." And they wanted something that they could do privately, and they could make their own decisions. And so, because of that, we changed development of DigiFarm, and it became an individual tool. Now, one of the things that we're starting to see is that there still are real gains to be had from also having a group-based version of DigiFarm, and that's under development now. But you know, when the individual piece came through, one of the things that was most important was to get the data flowing in that tool and to bring farmers on grid. Safaricom had a little bit of data, tiny bit of data on farmers, but not nearly enough. So there was a huge effort that continues to be made to this day to develop the digital profiles of farmers. This behavioral data was extremely important, I think, for Safaricom to begin to see the size of the market of women who are out there. If you look at this slide that Sharon's got up, 4.6 million women, 3.4 million women, 2.4 million women. This information really brought it home to Safaricom that they were going to have to do something different for women, which I think they have begun to do. But that and one of the most important things that they did was they signed up a partner called AIS, which is a large women's cooperative. And that women's cooperative became a real driver for signing up women in ways that women felt comfortable, where, we're able to speak the right language and go after the norms. We discovered early on that one of the problems with the loan product was that women needed a two-step loan approval process. One, when they wanted to take the loan, and the second, when their husbands signed off. There are big norms there around a woman feeling comfortable about taking on debt without the approval of her spouse. So those were some of the norms that we had to begin to, that we could see in the data where the drop-offs were in women's participation, and would have to get in and figure out what was going on behind that. But I'm sure that Sharon's got some ideas as well as they looked at the savings product.
Yes, thank you, Leesa. I think really looking at norms, specifically the behavioral norms, to start, looking at social norms that may or may not disrupt or disorient women's roles in their household. As Leesa had mentioned, like how are we sort of imposing or just working with the sort of norms that women are used to? So for example, providing an individualistic product design or feature or tool, and how that might disrupt household decision-making with a woman and her husband, and what that might then expose her to, for example. For some separate work that we did in Nigeria, there were also norms around Northern women sort of being able to transact, so sort of giving women that sort of agency to do it, and sort of looking at how that then shapes or can manifest in their day-to-day lives. And then more broadly, just looking at the environmental factors that would be able to support us integrating those norms into products as well.
Thank you. So we have 2 minutes to go. So let me just pick up some questions together. Questions from Matt. What sort of time period and roughly how many interviews did you build up the user's profile segments? So basically it's a question about the interviews, how you come up with this user's profile segments. Irene had a question about whether the interview, actually the analysis was focused on women only. And also she asked whether DFS products should be redone for women, or should we just tweak the communication, etc., to cater to the woman as a segment. Gerhard asked whether you do see a business case and what are the main drivers and obstacles as a summary. So Leesa, Sharon, over to you.
I'll do the business case and then turn it over to Sharon on the research. So the business case for DigiFarm is really driven by uptake of loans, repayment of loans, and uptake of the market platform and successful success on the market platform. And so to some of Ade's early points from the beginning, what we've seen is that women repay more and better. They repay at higher rates than men. We'll have a new case study coming out on that in about a month. And then also they are less likely to side sell and more likely to actually sell on platform reliably. So I think that these are things that have shown that women are actually, I think DigiFarm now is completely convinced that women are a cornerstone of the success of the platform, but they realized that they had to engage with women differently, not necessarily to make it more expensive. They just had to be effective in reaching them, winning them over, and keeping them active. So I think now the business case is well established. If those guys don't get people to take the loans and repay them and join the market platform and sell on market platform, the entire platform will fail. And now they realize that women
for rural female customers that would inform the product design, prototype, and testing, and then this would help us to build a business case. So, in January of 2019, we did a mixed, we used mixed methods approach to needs assessment. We did a quantitative Fenix call center survey where we administered 218 interviews. We also did a couple of waves of key informant interviews and focus group discussions to 120 female rural customers. We interviewed over 23 Fenix staff that included regional managers. We also looked at other rural market actors like mobile money agents, agri-input suppliers, agri-input retailers, basically to get to understand the financial and non-financial needs of these rural farmers. Now, for us to do that, the components that we had to look at, like agency, their roles and responsibilities, their perceptions and attitudes, their patterns around their farming practices, for example, how they earn and how they spend the existing financial services, but also the existing challenges they find when accessing them, mobile technology in terms of access usage, but also utilization of mobile technology, as well as digital financial services, but also information. Then when it came to the call center survey that we did, we were looking at demographics really, about how many female customers does Fenix have, but also we wanted to look at the home solar system consumption in terms of what's the repayment preferences, what's the repayment history for women farmers who are customers. But also, interestingly, at that time, Fenix had launched a school loan product, which was also a credit product. So we wanted to understand what were the repayment history in terms of adoption for the product itself, but also how many had been issued out and to who. And we got very interesting numbers that were very key. Now, one of the key things that's going to guide the rest of the discussion is around these rural female customer profiles that I really wanted to point out. So for us in our initial market research, there's the first three distinct profiles for women customers that are very, very interesting. Now, the reason why we found value in segmenting the existing group of female first customers was around one, because we believe that each faced different constraints, but also they had varying preferences and needs within the context of an agricultural loan product. The other interesting thing was around why we segmented female clients into those subgroups was because it created a very, very fundamental foundation for an effective product design, which was our next phase. But also it helped us to reveal similarities, but also differences between women that will actually influence product usefulness to other women, but also in terms of uptake and usage. So these three performance personalities were very, 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 very interesting for us to see that the digitally savvy who are young, who are less than 30, the married between 30 and 50, then elderly, and looking at their degree of agency, their responsibilities and digital technology. Now, in August of 2019, we rolled out our product design summary and prototyping, actually, where we engaged 150 participants to test out a few prototypes. So basically what we did was we developed and designed illustrations that were in form of storyboard narratives around the three prototypes. For us, we deemed appropriate and relevant to address our financial and non-financial needs for the rural customers. And interestingly, there were two loan products that really trailed out through the entire exercise. One was the lump sum disbursement, which was my loan, my risk. So for lump sum, farmers preferred to receive the entire lump sum of the money, and then they deem it appropriate to spend it in according to their farming seasonal needs. Then the other one was the loan disbursement, but a percentage of it, or a portion of that loan actually, to be paid up to an agri retailer, because like I mentioned earlier, there was a great need for quality inputs. And of course, 80% preferred if they had a lump sum disbursement, and 20% if they had a portion of it paid up to the agri input retailer. So this informed a lot of interesting insights into our proposed solution. So for our third phase, we actually proposed, we came up with a very, very detailed business plan. But in summary, we proposed two scenarios. One was the loan, my loan, my risk, which was the lump sum. That then the other was my loan, my risk, where a portion of it was actually to be paid to the agri input retailer. So we looked at a scenario where, actually single customers carried the loan obligations with loans averaging from about $100 to $200 per season per farmer. Interest rate, of course, being lower than the informal financial service provider, which are mainly VSLAs that who averages on 10%. So wanted to look at what was it affordable to them that would be lower. So we did a scenarios, financial modeling around 6.5 to 9.5%. Then we considered things like underwriting, issuance of the loans, marketing, the collection and management to be done digitally, of course, with a blend of in-person support, leveraging on agronomists or partners or village agents or RPCs for this, who are sales agents in this case. So for us, our key takeaways from on the solution, but also the overall experience as SIA and Fenix, we saw that segmentation of female clients into subgroups, like the distinct profiles that I mentioned earlier, is very, very fundamental. And of course, it informs for any financial service provider, it's very important because it informs the design process, but also is very helpful to review those similarities and differences between what would influence the product usefulness to other women, but also in terms of uptake and usage. The other key thing that from our lesson was that actually women had more significant degree of agency than anticipated, actually, in terms of how they controlled their finances, in terms of how they manage their farm finances, their households, and they played actually a very, very significant role in both pre and post-harvest activities. One of other key lessons for us was that there was a strong need for formalized and reliable sources of information around market pricing and input. Actually, as a takeaway from this, we recommended a couple of information service provider like WeFarm, Acorion, Limisa, that Fenix could engage in terms of partnership and see how they can pilot this, but also realize that while women found a lot of value in VSLAs in terms to provide community-based support, they actually prefer to bear the risk alone when it comes to a lot of information that we try to speak about. And the other interesting thing that also relates to the profiles that we earlier presented about was that actually a woman's degree of agency is influenced a lot by her lifestyle, but also marital status or condition in terms of shared responsibilities, degree of agency, and access to other financial services. And also it has an impact actually in the digital finance, in the design process or the digital product, because the risk bearing comes in terms of either it's shared or it's actually she bears the risk alone. So for us, at the end of the technical assistance, we're extremely excited that actually we have developed an acceptable rural female-centric agricultural loan concept with 2 prototypes. At that time, we are very glad that Fenix was able to gain much experience and understanding of the needs and financial behavior of their female clients. But also the interesting thing is that at that time, we recommended a couple of information service providers like Acorion, like I said, with their Easy Agri product, with WeFarm, and we are very excited that Fenix had begun discussions actually with Easy Agri to see how they could pilot this. Thank you very much.
Thank you so much, Jerry. We already have 2 questions for Jerry and Chris, and everyone, please feel free to share more questions in the chat panel or directly orally. Let's start with the 2 questions from Shelley. One is for Chris. How did Fenix find the business model given it already had a customer relationship? Did that reduce the costs and make it a profitable area? And then another question was, interesting to see the high awareness of mobile digital channels. But did most women already have their own mobile money accounts? So 2 questions to start.
Great, thanks. I can try and take on those. So in answer to the first question, the existing relationship definitely has certain benefits, but it also is not, it doesn't solve all the problems. So we expected that would help us really lower the cost of customer acquisition, but actually with the relationship that we had with our customers was through twofold. We communicated them regularly with SMS and to a lesser extent with phone calls to support their solar home system and their repayments on that. But that's actually a really limited channel to provide details of a more complex product. So the kind of products which we explored with Ashaye required a little bit more explanation, a little bit more opportunity to ask questions, and that's quite hard to do through a purely digital platform. And the other kind of key relationship point that we have with our customers is through the sales agents who are selling our solar home systems, and actually having a sales agent who's focused on selling solar home systems, moving towards providing sales pitches and an engagement point for agriculture was actually those 2 products are quite different, and so it's quite difficult to provide the kind of training necessary to those agents. The profiles of those agents are better suited. Someone who is great at selling solar lighting kits may not actually be great at selling agricultural financial products, and so it does help having that relationship, but it definitely doesn't solve all the problems. On the second question, high awareness of mobile and digital channels. I think it's really important to note that all of this research was done on Fenix's existing customers, and that group is very much not representative of all women farmers. So by definition, in order to have a solar home system, you have to, with Fenix, you had to already have a mobile money account, or you had to sign up for mobile money at that point. And so when we were pitching these products, all of these women already had mobile money accounts and had learned how to use them, or at least learned how to use them with the aid of a fellow family member or with the aid of the mobile money agent. So, yeah.
Sounds great. Thank you. Any other question from this group?
Yeah, this is Puneet Chopra from Microsoft Consulting. I have a question. Could you help understand how this product and the experience and the impact was in comparison to products that are offered by SACCOs and microfinance institutions, and not generic products, but those that are tailored for farmers and agribusiness, and then maybe more targeted at women. So, were there differences and experience and impact that was kind of seen as different from some of those?
Sure. So the product that the SA just spoke about and that Jerry just presented, we never actually piloted this product in the end. So the combination of like restructuring of Fenix and COVID meant that we never managed to get this product out to customers. So I can't comment on the impact of those products themselves. I think the place where Fenix provided a bit of a unique standpoint is that that there's the potential to offer to take greater risks with these customers because of the collateral of that solar home system. So because you've built up a credit score through these small repayments for that solar, you can actually be able to lend to customers who you otherwise have very little data on. And also you can encourage that repayment by the solar home system turns off if they miss a payment. If they've missed a payment on their agricultural financing product, it will also turn off, and so you've got that added leverage that you can pull in, which is different from what VSLAs or other MFIs are able to do.
Okay,
thank you. You have another question from Anna in the chat panel, which is, have there been any complaints reported by rural women and how they were dealt with? And I think we have only 5 more minutes, so perhaps after that, if there's no more question, you can leave us with one word on any advice you would give to a financial service provider trying to offer digital financial services to female farmers.
Sure. Yeah, I can't think of Anna, I'm not sure if you're meaning in terms of the kind of research process or in terms of actually how kind of Fenix's agents and Fenix's services were presented to customers, but I can't think of any specific complaints. So yeah, so sorry, I'm not sure I have insight on that one. Unless you
sorry, so you have another one from Roberto. You mentioned that Fenix integrates an agri-value chain approach for finance. How did Fenix integrate that value chain approach? How do financial products differ from traditional finance? Did this approach allow increasing access to finance for women?
Okay, sorry, just need to read that one again. Okay. So yeah, so the way we were really trying to integrate that value chain approach was through all of the add-on features around the credit products. So the need, like the research really highlighted the importance of providing both like the credit facility for these women, but also that information channel as well, and then also a point where they could actually purchase these like improved inputs. So one of the real key highlights that came out was that many women farmers knew the importance of purchasing higher quality inputs, but didn't trust any of the suppliers available, which is not surprising given that some research, a little bit older research in Uganda showed that around 50% of seeds in the market that marketed themselves as improved seed were actually fake and actually not likely to give the performance that they're advertising. So it's a very valid concern. And so that's why we wanted to try and pilot along with a provider of information and a marketplace where they could buy trusted inputs, and that was with Easy Agric, rather than just do a kind of just straight financial products by in and of itself. And so yeah, those other components played a really important role in actually providing a more holistic approach.
Thank you, Chris. And beyond just partnering with information providers, you have a question about, has Fenix partnered with any financial institution in Uganda? And if not, is there room for that?
Yeah,
and I think you'll have your concluding statement on this because we'll move back to plenary.
Great. So Fenix did not, and I don't believe has not partnered with any financial institutions in Uganda, specifically to end consumer facing products. There is definitely room for that. I think one of the challenges with a pay-as-you-go solar home system company trying to do this is that the partners don't see a huge market there. So even though Fenix, as of 2019, had around 350,000 customers in Uganda, those who would qualify for these kind of products was less than 100,000, and any of the really big financial institutions wouldn't see that as a really particularly interesting customer base. And then the second point is that actually a credit score derived on payments towards a solar product is very much not a traditional credit score, and so it's a hard sales pitch to try and pitch that as a basis for lending to a more traditional institution. And actually the idea of that as collateral is not necessarily immediately accepted. So yeah. And we've got 16 seconds, so I'm gonna leave it at that.
Thank you so much, Chris and Jerry. That was really insightful. And with that, I think we'll go back to plenary.
Okay, let's start. So, hi everyone, welcome to the myAgro's room. I am Asuka Okumura from the Agriculture and Food Global Practice of the World Bank. I'm focusing on agribusiness, agrifinance, and digital technology agenda. We have 20 minutes here in the breakout room. First, I will give a few words, then Kelvin will tell us more about myAgro's exciting story. After that, we will have a very short Q&A session. I think that to effectively manage our Q&A conversation, I would like you to post your question to the chat during Kelvin's presentation. Then I pick those from the chat window to let Kelvin to answer. I remember that we had our initial discussion in late 2017 with myAgro team, and we learned that myAgro had already built a successful analog-based saving service for farmers' input purchase using scratch cards. At that time, they operated in Mali and Senegal, and their product well reached women farmers there. Then they had, as Kelvin already mentioned, they had an ambitious goal to reach 1 million smallholder farmers by 2025, and scaling up through digitization was vital for achieving that goal. So they told us that myAgro was planning to pilot a digital model in a new market, which was Tanzania, based on a few reasons. One is the existing saving groups network of Agrifinance Foundation, with which myAgro can partner and scale up quickly. And the second is the greater telecom infrastructure and a better mobile money coverage than where they operated in western part of Africa. So myAgro was facing a big challenge to enter a brand new market for them to try building a business case for a new product, which has the angles we discussed today: digital, agriculture, and women. Then that's where we found a room for our technical assistant. We provided a support in developing a communication and outreach strategy instead of a product itself, as Rachel mentioned earlier, for their targeted audience by conducting an interview-based field research. The field interviews were conducted in summer 2018, and it found a quite dynamic and a challenging market situation on the field. It revealed their farming practices and farmers' cash flow, and also their familiarity with mobile services. It also gave a good idea of possible value proposition for myAgro's product. So let's listen to Kelvin. How did the myAgro journey go after our intervention? Kelvin, over to you.
Thank you, Asuka. Okay, so yes, I don't think I need to kind of go through again the introductions, but I think taking over from the objective and methodology of the TA support, we aligned on rather than developing a new product to kind of going back and looking at all of the successful experiences that we had had in Mali and Senegal, and building building onto that existing product bundle. So there were 70 interviews that were conducted, and so many other smaller focused groups interviews. These kind of informed onto what the women, what the mobile agents, mobile money agents kind of had to say about the model, what could be built on top of our model. So what we accomplished after the technical assistance, we kind of went ahead and after the findings, we went ahead and did a full product tune and then implemented the learnings. So the gender specific approach was designed. So we learned that hey, if we really wanted to kind of go ahead and build on top of the women existing into the villages that we were going out to operate into the southern part of Tanzania, we had to kind of bring in the best learning. So we adapted the showing the best experiences that were coming from Mali and Senegal onto all of these influencers that were already built by AgriFin Foundation in the areas. But also we kind of went and emphasized the enrollment and in terms of how do we change language? Yes, in Mali and Senegal, we were used to talking about railway and savings, allocating money to your account. So this did not fly with the group that we were approaching to, and this could have come from so many different contexts. Advanced mobile money platforms, literacy level being high. So we had to kind of find the best language to to fit the group. Next. Yeah, so we also kind of faced a couple of challenges. Tanzania, unlike Kenya, we still have in really remote areas, we still have challenges with mobile money agents having enough liquidity to sustain normal operations. When it comes to making withdrawals, when it comes to making payments to different utilities. So this was a very big challenge. But again, I think we kind of discovered quickly that this was an opportunity. Yeah. So we were able to kind of bridge the gap between the our farmers who are 60% women, but also kind of the network of all of these mobile money agents. And of course, it was intense in the beginning. We had to kind of invite them into our trainings, invite them into our normal meetings, so that they could see how we operate, but also they could also use that opportunity to collect and facilitate payments for these groups of farmers, which are mostly women, but also mostly also a couple of fair share size of all the people that are into the groups. So that really worked out well. But also given that we kind of do planning with way ahead of time. Yeah, we do projections of 9 months. We do purchases of inputs way ahead of time, 3, 4 months sometimes ahead of time before we deliver them to farmers. We really needed to get very good at building logistical supply chains to the last mile. Because we are delivering within 5 kilometers of where the farmer is located. So it makes a lot of sense if we can kind of anticipate, but also be able to have a very seamless and lean delivery mechanism. Going to the next slide, the learnings, I think, the takeaways were a lot, but, I think those that have really propelled us to step into the next phase from being a pilot now to becoming a full-fledged operation. One is, finding the product fit for our farmers. Yeah, we started, with more or less, high package sizes, and these were either expensive or people were not able to cultivate such big lands. So that, kind of scaling back to finding the, the medium product, package size that could fit, mostly women who, drive, decision and farming was very key. But also being able to kind of go back into Agrifinance's portfolio and hiring those, saving leader groups who were inexisting before, where at least 70 to 80% of these were women, was very key for us turning around and heading into the sustainability path for the field people, especially when it comes to kind of enrolling the right network of agents. And then, something that we kind of are still going on with was kind of adapting the SMS process, where we were kind of in small bites and small chunks, kind of pushing out, information and marketing materials to all of these 1,000 farmers. So on the last bit before, so that I can let everybody continue with the questions quickly. You feel free to share that that slide, which basically highlights the key potential results that we kind of pulled out. But I think the key takeaways as we are going into the next phase of our growth is that we are going to fully digitize the way we enroll farmers, digitize the way we make a collection of our layaway, without having too much of presence onto face-to-face interactions. Thank you. Back to you, Asuka.
Thank you, Kelvin. This is fantastic. It's really fantastic to learn that the team has been making a steady progress despite these challenges. So congratulations, and we look forward to learn more. And then let's move on to Q&A, but I think that the colleagues are quite shy in this group, and I'm not sure this chat is functioning in this break room. So is it okay to unmute people, or okay, let me leverage my facilitator's role to pose my question. I have been engaging with various digital services for smallholder farmers, and one of globally common aspects keep coming is how to bundle services for farmers. And I think that the DigiFarm is a kind of very good example of the how to bundle the service. Farmers are facing multi-dimensional challenges, and just providing one solution doesn't help. And also bundling service could achieve better uptake, that also improve their efficiency of the business provider side as well. So it could have the both win-win situation if we can nicely bundle the services. So I think that the myAgro is unique to provide quality. Sorry?
Probably I can let Belize respond. If you wish to respond via chat box, you can do so. As we continue to hear from the next presenter. Also, there is another person from one of the participants called Damola Olade. I will let the concerned people respond to these questions as we continue to hear from the next presenter, but also we can come back to those questions at the end. We have another important panelist here today with us. And
I think that is not in our group.
It is Madame Pacifique. We know RCA is the public institution.
Do you want to continue, Asuka?
Sorry.
So that,
okay, I think that there's something mixed up. So my question is,
yeah.
myAgro is very unique to provide quality input in a timely manner, along with training and also friendly payment method. So how do your clients, women clients, value this packaged service?
Thank you, Asuka. So I will touch that in this manner. So I think the women valuing the bundled and packaged services has been a key and part of the model. It is known that farmers normally will just basically go out and go to a distributor, input distributor, and then when they are there, they decide to buy whatever kind of is available, depending on their preference. So they'll go buy seeds, or not necessarily seeds. They would go buy fertilizers mostly, because they normally have leftover seeds that are hanging out, and this definitely impacts the yield and that they get at the end of the season. So being able to package is part and parcel of our methodology to make sure that we can certainly with certainty say that we estimate the yield to be at X rate by the end of the season. And this has found preference within specifically women, because as you go into delivering, planting, and all of the M&E activities, you kind of are not guessing on what to expect. You kind of already know what the final output will be. And then we have another question from Anthony, sorry if I pronounce the name wrongly. Yeah, so looking at the question of a business case, can you clarify what is myAgro's business model between cost and revenue? And can you indicate what challenges regarding the business model were specific to women clients? Yeah, so in terms of the business model, myAgro's yeah, to clarify between the cost and the revenue, we have the biggest chunk of our cost is the field activities, which are which start from the time we enroll a farmer, the time the 6-7 months that we follow up with the farmer to make the layaway, little by little layaway onto their wallet. and then the time that we spend, doing delivery and trainings that are leading to planting. So that is where the big chunk of the cost goes. But then the revenue kind of comes in from this layaway that they put in. Of course, there's a small margin that takes care of all of the the delivery cost that comes after that. I'm not sure if I sufficiently answered your question, but also.
Thank you, Kelvin. And I think that we are having a little bit more following up question, and
okay.
How to manage the different component of the process, the mobile layaway. I think it's more like providing service digitally in the financial aspect, but also more physical side is timely delivery through the logistic of the input, and also training. It's a little bit more human interaction. How do you manage this quite different component of business in a relatively remote area?
Yeah. So I mean, as this is our third year now into the program, and we have managed to kind of find our domain expertise now. Yeah, we know how to enroll farmers onto the program, and we know how to collect, layaway programs, layaway payments from farmers. One of the areas that we are still working on, it's very well advanced and developed into West Africa, Mali, and Senegal specific, but in Tanzania, that has not yet is not yet well streamlined. So we are still working on what is the best model going forward. So we, the field enrollment and payment collection is well done. And we kind of gotten a lot of lessons learned from it, where we have gotten to a point where we want to digitize it because of the lessons. The second piece that we're working on now is the delivery piece that, how do we build logistical platforms to be able to serve farmers within, 5 kilometers of the existence.
Thank you. The very last quick question. Do you see any improvement of efficiency by digitization of your operation? And then it's making profit already?
Definitely. I think this is going to be a game changer because currently we are spending close to $60 per farmer, and that is a lot of money at our scale. So if we can, with digital operations, to 80% of our operations, that will definitely push us back.
Excellent. So welcome back. There was a lot of lively discussion in our small group. So let's catch up on what everyone was talking about. For the next few minutes, I'll invite our 3 rapporteurs to share their observations, and then we'll tie it all together, elevate our experience, and consider the way forward. And I'm really looking forward to our closing comments on that. But first, this stellar group of rapporteurs. You met them in your small groups and you know them as some of the leading thinkers doing really interesting work in our sector. Clara Colina from the MasterCard Foundation's Rural and Agricultural Finance Learning Lab, Nathan Were with the IFC Agribusiness Unit in Nairobi, and Alethea Donnell from the Gender Innovation Lab in the World Bank's Africa Chief Economist Office. So Clara, first to you, tell us about the DigiFarm conversation. What reflections did you hear about DigiFarm's work to reach women in agriculture with DFS? And how did they resonate with the Learning Lab's work on pathways and service delivery models, which are also exploring the business case for serving women?
Wonderful. Thanks so much, Jamie. So a lot of interesting insights coming from Leesa, Sharon, and the rest of the questions. But I think I'll point to 2 main ones or 2 buckets. One, a lot of emphasis on the diversity of women and the different segments, which in turn leads to the, having to design and deliver services in a way that adapts to different women needs and challenges. This resonates completely with the work that we've been doing in trying to understand how women transition through different pathways, women having more diverse livelihoods even than men, and combining farming with multiple other sources of income, having similar motivations to men in terms of wanting to expand the farm or expand their business, but behaving or engaging with financial services in a very different way as men do. A preference over savings, as was highlighted by DigiFarm, but also in the way that those financial services are structured. I think something that has been coming up in our research is the higher reliance of women in family support or the community or the group. And that was something that Leesa and Sharon were also pointing to, the greater preference of women to group structured products. And I actually didn't know about this, but there's in the product roadmap, there's a group product that will be coming up in the next months for DigiFarm. And so again, that diversity and need to account for those differences. The second thing that came up really strongly is the power of that business case. So really mixing qualitative with quantitative data and putting the numbers out there to drive the private sector into getting into this sector. And I think the best or the quote that I take with me today, and hopefully others in the group, was what just Leesa shared. DigiFarm has realized that women are a cornerstone to the program, and they need to serve women as part of, it's not part of their impact case, it's part of their business case. So really doing that mind shift and putting the numbers out there and trying to understand active rates, usage rates, etc. It's a key part of that. So those were the two things that stood out most from the group.
Great. Thanks, Clara. That shift from impact to business is important. So Nathan, let's come to you. Let's talk about the conversation on the Fenix experience in Uganda. What caught your attention, given your long experience in agriculture, financial services, digitization in Uganda? What did you hear in the conversation?
Yeah, thank you, Jamie. I think what I had really goes back to what Ade opened with and what Clara was talking about, which is really solving for differences. I think Fenix took a great deal of time in the initial phases of this project conducting research, trying to understand the distinct profiles of women within the market that we are trying to solve, trying to develop the product for, but also trying to unpack the different opportunities that these different profiles presented. I think this is important. We kind of tend to think as women being the same, but in most cases, this is really not the case, because when you try to understand their different profiles, you try to understand their aspirations, you try to understand their drives and motivations, you are able to see that their needs are going to be completely different in terms of how they look at technology, but also their capabilities in terms of using technology. So I think I found this quite important, not making those assumptions that, let's design for women, and looking at these different distinctions provides different opportunities that then help you in targeting. The other takeaway for me is really the question of the issue of bundling. I think in our earlier CGAP surveys, the National Household Segmentation surveys, we actually found that, in Uganda, I think about 40 or 45% of women and smallholder farmers, for that matter, we are looking for a savings product bundled with another solution. We are looking for credit products bundled with another solution. And I think this is also what critically comes out of the Fenix case, that it's not just about delivering credit, but being able to deliver other services that complement the needs and aspirations of women. I think the linkage that, through their research and engagement with women, being able to, recommend the strategic impact advisors, being able to recommend Fenix to work with other sector players, providing information services, especially around extension, market information, access to inputs, and things like those. And I think this is key, because it strengthens the business case. It makes the value proposition easier when you're trying to market such solutions to women. So I think for me, my really key takeaways are really around, the distinct profiles that come out of segmentation, present unique opportunities for providers, and providers need to look at them keenly in order to target the segments under those different profiles. But also being able to provide a holistic sort of solutions, I think, is critical beyond just credit or savings, but looking at other complementary services that make it better for women to uptake and eventually use these digital financial services. Over to you, Jamie.
Great. Thanks, Nathan. That's great. And now we turn to you, Alicia, and picking up on the points that Clara and Nathan have made and thinking about the discussion that you just had with myAgro in Tanzania, what struck you in the conversation? And did you see any links to insights from the Gender Innovation Lab?
Thank you so much, Jamie. Yeah, we had a very rich conversation and discussion. I think the first thing I want to highlight is really that Kerben brought out is the importance of meeting women where they're at. And one way this came out is myAgro's adaptation to smaller package sizes for agricultural inputs that they developed through piloting. This was one of our key policy recommendations in our Gender Innovation Lab Leveling the Field report, our flagship agriculture report back in 2014 that Rachel also showed some results from earlier in their presentation. So certifying kind of smaller seeds and fertilizer bags for women in a way that aligns with women cash flows and responds to the fact that women have less money to buy in bulk and have less control over their income. The second, and also picking up on what Nathan was just saying, was the value that women place on bundling services. This came out very clearly in the myAgro conversation and is what led them to provide this kind of, this bundled approach. And I think it also picks up on the fact that we know that women are one of the key resources that women lack compared to male farmers is time. Women are time constrained because they have extra childcare, domestic responsibilities. So anything that makes it easier for women to get what they need in one go is really valuable. We found this at the Gender Innovation Lab in one of our impact evaluations, actually also in Tanzania, where we tested mobile savings with and without skills training. And transaction level data there showed that women in the mobile savings group saved twice as much with the mobile savings training compared to women in the control group. But those that also had the additional skills training saved almost 4 times more because they were able to visualize what they wanted to save for. And just to conclude quickly, the last one is really the importance of trust and earnings women trust. We saw this in every single kind of financial study we did, whether it was in Ghana, Nigeria, and Cote d'Ivoire. A lot of women who did not take up reported being swindled by past financial institutions, and it took multiple waves and really being there for them and seeing that we, if something goes wrong, we're there to fix it and they can trust us to take care of it. That really, really helped. And often we think that low trust in financial institutions is gender neutral, but the truth is, as Leesa was also saying earlier, that female farmers often have a smaller margin for error. And so the importance of meeting women where they're at and earning their trust, I think are some really important themes that came out of our discussion.
Thanks, Alicia. That's really helpful. Can you drop a link to the Leveling the Field paper in the chat? I love
Absolutely.
that paper. It's so well done. I refer to that a lot. So we just have one more quick question for the 3 of you. And I'd like you to take what you heard in the breakout sessions, weave it into your own experience, the trends that you're watching, and tell us, how do you answer the question for today? Is there a business case for digital financial services serving women in rural and agricultural livelihoods? Just a quick answer from each of you would be great. Clara, let's start with you.
Wonderful, thanks, Jamie. So I think I first start saying that this is probably one of the biggest knowledge gaps that we're seeing in the sector. And I think as Henriette was talking just at the start of this webinar today, we need to measure to drive action. So I think that there's encouraging progress in terms of getting more institutions to dive into this topic and really getting us the quantitative data that we need to convince private sector actors, in particular, of serving this segment. What we have seen within our portfolio and engaging with different organizations is that the economics of serving women is very challenging. I think we've seen today, and we've heard from multiple guests here, they tend to have lower customer churn. They tend to be more loyal, more sticky customers. They have higher repayment rates, but they do, or at least what we've seen in the organizations that we've been able to dive into the numbers, is a much higher acquisition cost. I think, as we were just pointing out, we need to meet women where they are, and that usually means a higher customer acquisition cost. There's a higher cost to serve. Again, in terms of relying more on human elements, which means that capturing those efficiency gains that come from digital is more challenging for a lot of the providers. And last but not least, the lower transaction sizes, whether that's loan sizes, whether those market transaction sizes, which constrain the economics. Essentially, what that means is that there might be a positive business case in terms of a positive customer lifetime value, but to the extent that that customer lifetime value is lower than that of men, the incentives are not there for private sectors actors to engage in many circumstances. So how do we shift from, like, there is a business case, but that business case may be less than that of men? So we are personally, from the work that we've been doing, we're optimistic. We see this opportunity with the right level of support. And I think that's where it comes. What's the role of donors? What's the role of development financial institutions?
Yeah.
Should we use credit guarantees to actually be able to increase the loan size that has a huge impact on the customer lifetime value of a women? Or how do we use grants to offset the cost of scaling? Because when those scale advantages take off, then those efficiency gains make the business case much more attractive, right? So I think it's the relative comparison between men and women where it gets tricky, especially when it comes to private.
Yeah. Thanks. That's a really good point, Clara. Nathan, over to you. A quick answer to a tough question. Is there a business case?
I think there is a business case. Is it obvious and can it be seen by anybody, everybody, and the providers? No. And I think that's where the biggest question is. The business case may not be obvious and may not be easily seen by people that are trying to serve women or those that would like to serve them. And I think this is the biggest challenge upon us. How do we bring the opportunity? How do we bring the size and magnitude of the business opportunity to the private sector in order to tap into it? And I think opportunities like this, where we have cases of providers coming forward and trying to show, how they have done it, what they are doing, and ultimately what the results look like, I think it's a good way to start. But I think for most of the work that we've been trying to do, even within IFC, working with agribusiness companies, it's not always obvious. There's always that question. I mean, we're investing X amount of dollars. What are we going to get out of this? They don't actually see it. So it's a lot of heavy lifting in trying to spotlight some of the good cases out there where the business case of serving women has actually been proven with tangible numbers and tangible results as a way of demonstrating to other private sector providers that actually, look here, there is a very strong incentive in working with women, and here are the opportunities that you can be able to tap in. I think what we also see in most of the institutions is also the lack of capability in terms of developing solutions that target women. Of course, as we've heard on the discussions, women needs are unique, their profiles are different. And I think there's always this notion that, one size fits all product will all be able to service them. And I think this is where also it goes wrong. And you don't blame them, because the ability to design solutions that really speak the needs of the women is not always there. So two things I would really say: that one, we need to amplify the business case. We need to use proven cases, the myAgros, the Kolb, the Fenix of this world, and demonstrate to provide that, yes, there is a great opportunity. Secondly, we need to work with those providers and help them to design solutions that actually speak the needs of women. Thank you.
Excellent. Thanks, Nathan. Thanks. And Alethea, over to you for the last word in this section before we go to our closing remarks.
Yeah, thank you so much, Jamie, and everyone. So I'll keep it short and sweet. I would say there is a business case, but it will be different in different contexts. And what it depends on is whether the service really addresses the problems at the roots of women's lower farm profits, namely that they have less time, less money, and less control over both, or if the service is bundled with other interventions to address problems like skills gaps and even gender norms, which I'm seeing some service providers start to weave into their products, and is really, really exciting. So as a researcher, I'll say I think there's a lot more rigorous research to do on when and how digital financial services increase women's farm profits, and when they don't, what needs to be changed. And I look forward to what's going to come down the pipeline in the next few years. It's a very exciting field.
Wonderful. Special thanks to the three of you, Clara, Nathan, Alicia. Really appreciate your insights, pulling us together from the breakout sessions. Definitely make sure that you're following them on Twitter and LinkedIn. Let's bring our last special guest into the conversation to tie everything together with some higher level closing reflections. Panos Varangis is Principal Operations Officer at the IFC, leading the work in agricultural finance for the Financial Institutions Group. Panos was Global Lead for Agricultural Finance and Agricultural Insurance in the Finance, Competitiveness, and Innovation Global Practice at the World Bank Group. And he led IFC's work in advising financial institutions to provide financial services to SMEs, agribusinesses, and farmers. And he's just the colleague we need to build on what we're hearing from DigiFarm, Fenix, and myAgro about DFS for women in rural and ag livelihoods, and open the aperture, look across the sector, and reflect on what's ahead. So Panos, in these last few minutes of our conversation, we welcome your insights to tie it all together. The floor is yours.
Thank you, Jamie. I think that the discussions were extremely well organized, and the speakers, they provided the key highlights. So, you know, they leave me my easier job to try to pull together, but the themes are repeating in all the discussions. So the first thing is that I want to go back to a comment that was, you know, it's not a slam dunk. Even though we think that there is a business case, even though that there are significant benefits in terms of repayment rates, loyalty, less side selling, which in some way we were suspecting this. I think now we are confirming this, but still we have way to go. So it's not a slam dunk. And the big question for me after hearing all the presentation is on the how. I think that's the important thing. And on the how is, I took out 4 points. One is the segmentation and the data. So we need to invest to understand better and segment. So one size fits all doesn't work. And just because we say, yeah, we attend to women clients, that doesn't mean that we are gender centric and we have the welcoming mat. The second thing is the issue of the ecosystem. So it's not just credit. It's not just savings. It may not be just financial products, but it can be access to markets, advice, and perhaps other needs. So creating an ecosystem through a platform to serve the women's need. The third is the product design. That is very important, but equally important actually, it's the digital to human journey. So basically what we're getting is that there is a high touch along with the high tech. And that also perhaps leads to the higher cost to serve that some people also have mentioned. And the fourth thing is that the norms can be an important factor. So the context and the different markets are also a very important thing to consider. So I think with all of this, to my pleasant surprise, all of these case studies, they prove quite a point, and I was very happy to hear that they were valued by the partners and that the partners are doing something different, and their attention to women clients has improved and increased through this project. So I think that was a very good takeaway from me, and I'm glad that this project has led to doing things better. Back to you, Jamie.
Thanks, Panos. As we close today's webinar, a reminder that our conversation continues. We obviously still have a lot to talk about. We'll email you the recording and decks from today, including the paper that gives an overview of this work, and we'll post them on the event page. Note also there's a series of upcoming webinars and workshops on women in rural and agricultural livelihoods and inclusive financial services. And don't worry about taking down these dates. We'll put them in the email as well. Just keep in mind that there's coming and there's a lot more conversations for you to participate in and bring your expertise. Reach out to me, to our presenters, panelists for more information, and make sure that we're connected on Twitter and LinkedIn. And last and most importantly for me, thank you to all of you who dialed in for the conversation, to our presenters, our panelists, to Rachel Toshi and the bank's Agrifinance Community of Practice for assembling this super group of expert colleagues, and to the CGAP communications team, Daniel, Tony, Natalie, and Andrew, who make everything go smoothly. A big thanks to all of you for sharing your time and expertise. Have a great day and see you next time.